Have you ever been watching the stock market, seen it suddenly drop for no apparent reason, and just thought to yourself, what is happening right now? Yeah, you are not alone. Today, we're going to pull back the curtain on all that market madness and figure out what's really driving the numbers as we look ahead to 2026. I mean, this comment from an investing forum just says it all, doesn't it? It perfectly captures that feeling of complete and utter confusion. You're checking all the headlines, you see nothing, but your portfolio is just flashing red. It's a feeling I think a lot of us can relate to. I mean, seriously. One minute, everything's going up, the next it's plummeting, and a lot of the time, there's just no obvious reason for it. It can feel like the market is just making things up as it goes along. But what if I told you there's actually a logic behind all of it? So to start figuring this out, let's see what the pros are thinking. And when I say pros, I'm talking about the smart money, those massive institutional investors who manage billions and billions of dollars. They are constantly looking out at the horizon for the biggest risks, and what they're seeing right now, well, it tells us a lot. Thanks to a huge survey from Natixis, we get a little peek inside their heads, and what they're seeing for 2026 has them on high alert. They are absolutely bracing for a bumpy ride and are getting worried about a few key things in particular. And get this, nearly half of the world's biggest investors say the number one threat to the economy isn't a market crash or a recession. It's a major war or some other big geopolitical conflict. That is a massive change from what they were worried about just a couple of years ago. Coming in at a very close second is a fear that I think a lot of us have seen brewing. After years of just incredible growth, 43% of these pros are worried that the high-flying tech stocks, the ones fueled by AI, might be in a bubble that is just about ready to pop. And rounding out their top three biggest fears is the more traditional threat of a recession or a major government debt crisis. About a third of them see slowing growth and rising debt as a huge problem that's just waiting to happen. But here's what's really interesting. These big investors, they don't just worry, they act. So in response to all these fears, they're actively changing their game plan for 2026. Let's take a look at where they're actually moving their money. So for decades, the gold standard for investing was the 60-40 portfolio. 60% in stocks for growth, 40% in bonds for safety. But that's changing. The new model they're shifting to is 60-20-20. They're taking half of their bond money and moving it into something they call alternatives, which they think will do a lot better in a more uncertain world. So what in the world are alternatives? Well, simply put, they're just investments outside of the normal public stock and bond markets. We're talking about things like private companies, infrastructure projects like building bridges, or even real estate. The big idea is that these assets don't always move in the same direction as the stock market, so they offer a different kind of stability. And by the way, this shift in strategy is a really huge deal. It shows how the biggest players are gearing up for some big, world-changing events. If you want to learn more about strategies just like this one, go ahead and subscribe to cycapital.com and our YouTube channel for weekly insights. Okay, so now we get to the real aha moment of all this. We've seen what the pros are afraid of and how they're reacting. But to really truly understand why the market moves the way it does day to day, you need to know its one secret rule. And this one idea, it explains almost everything. The secret is a simple little concept called priced in. It's the idea that by the time you hear a piece of news, the market already knows about it. All the analyst reports, all the company predictions, all the rumors, it's all already baked into the current stock price. The market is always trying to look ahead. So this leads to a really, really important question. If everyone already expects good news, and that expectation is already priced in, then what on earth actually makes the stock go up or down when that news finally drops? The answer is so simple, but it's so powerful. Surprise. The market doesn't move based on the news itself. It moves on the difference between the news and what everyone thought the news was going to be. Let's use a super simple analogy. Think about a test grade. If everyone expects you to get an A, the stock price already reflects that. If you get that A, well, it's not a surprise, and the price barely moves. But what if you get an A+? That's a positive surprise, and the price jumps. And if you get an A-, even though that's still a great grade, it's a negative surprise compared to what was expected, so the price will actually fall. Okay, so let's connect this secret rule back to the real world of news headlines and that initial feeling of confusion we started with. This is where it all starts to click. So you see a headline, company reports record profits. Your first instinct is, wow, the stock must be soaring. But now you know the secret question to ask yourself. Okay, but were those profits even better than what Wall Street already expected? That is the only question that actually matters. And this totally explains that bizarre situation where a company announces great news, but the stock falls. It could be because expectations were just sky high and they only delivered great instead of spectacular. Or maybe the company warned that the future looks a little weaker. See, the past was good, but the future, that's what investors truly care about. So, you see, the market isn't random at all. Just think of it like a massive, super fast machine that's constantly trying to guess the future and set prices based on those guesses. Its entire job is to react instantly to surprises. Once you understand this fundamental rule, you are already well on your way to becoming a smarter, more confident investor. And to keep building on this foundation with clear, simple insights every single week, make sure to subscribe to us here on YouTube and over at cycapital.com. So I'll leave you with this question. Now that you know the market's secret rule, what are you going to look for beyond the headline the next time you see a big earnings announcement? Think about it. Thanks for tuning in.